Liebe Zuschauer, ganz herzlich willkommen zu Inside Wall Street aus dem Studio der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Peter Langerman. Er ist der Präsident und CEO of Franklin Mutual Series. Thank you so much for joining us.
Great to be here.
Peter, you're having some interesting companies in your portfolio. For example, Dell, and we heard the Dell deal will be ready in October. So is this something you keep an eye on?
We do a lot of work in merger and acquisition targets areas generally. Our philosophy is a deep value philosophy, so we often find ourselves owning companies that may become subject to deals. We think they're cheap, and sometimes other people think they're cheap as well. And the Dell example is one where actually we had owned the stock previously. We actually didn't own the stock at the time that the bid was made, but then we got involved in a pretty significant way. So we were quite involved in that deal as it evolved, and there was a lot of press about it, a lot of interesting back and forth, some large shareholders, Carl Icahn and others who were trying to make their way. Ultimately, there was an agreement on the deal, and I think we publicly came out, obviously, and said that we were supportive of the enhanced proposal. So while we thought it wasn't a great outcome, it was an acceptable outcome. But it's an example of the kind of thing where, again, our job is to make money for our shareholders, and we did that in this case, and it helped for us to be at the table, to have a say in how this thing actually came out.
And do you think it's the right strategy to take Dell or to leave the stock markets?
Well, Dell is it's a restructuring story. There's no doubt about it. It's obviously had a very great history, but it's hit some hard times. I think the real question, and the question that people like Carl Icahn had, was did the company need to go private to do what it needed to do in terms of restructuring? I think, in fact, it didn't need to do that, but the reality was when you had a large shareholder like Michael Dell, who is so connected to the company and so connected to the company's business, that it made it difficult to find an alternative structure outside of something that he supported in the going private transaction. So it was a unique situation where you had this large shareholder who's still a very important part, who had a particular way of going about what he thought he needed to do. So actually for the business, it's probably a good thing to be going through this restructuring process. I believe they could have done it in a public context, but for a lot of internal reasons, they didn't prefer to go that route. And so that was really the dynamic of the struggle between what the company could be worth in a going public context versus this going private. So that's what made it interesting.
You're also owning JP Morgan, and now we hear Jamie Dimon is going to the U.S. Secretaries, and he has to talk about how many money the bank has to pay. We hear maybe $11 billion. That's a huge amount of money. Do you think the stock is interesting at the moment?
That would be a very large check, even for a company like JP Morgan, but manageable. I think the reality is, look, as a shareholder of JP Morgan, the better a deal that JP Morgan can cut with the authorities, the better it is for shareholders, no doubt about that. On the other hand, there is a price to be paid for cleaning up, if they can actually do this, cleaning up the mess. And it's a big mess. There's a lot of legacy history and costs involved. I'm sure it involves management time, and it hurts the business. So to the extent that the company can clean up those issues, writing a albeit large check would probably be a positive. Now, there's a point at which the company has to say, and the shareholders have to say, enough is enough. That's too much. We need to fight. But there's certainly a margin there to say, it's a bit more than we would have preferred and probably more than we think we need to pay, but it's worth it to get those issues behind us. And fundamentally, it is a very good company. We still believe, even with its problems, well managed. It's got its issues. They need to beef up, and they are beefing up their compliance and other issues, but it's got a very strong business, among the best margins in the business of its peers. So we like the fundamentals going forward, and it would be a positive if they can clean up those legacy issues.
So when we talk about Dell and JP Morgan, you are interested in the financials and in the tech sector?
Again, our approach is very much bottoms up. So it's not so much that we want a particular sector, tech or financials. We want what's cheap. It turns out that in the so-called tech sector, there are a number of companies that are cash rich, that may be unloved, that we find interesting value. So things like a Microsoft, which we've owned for a while. More recently, things like an Apple, which everyone loved last year and previous to that, and then all of a sudden people fell out of love with it, and so did the stock. Well, that's the time that we begin to look at things. So we became a shareholder of Apple this year and continue to believe that it's a cheap stock. So it's not so much that it's a tech company, but it's in an area that people have all of a sudden said, well, it's not a growth company anymore. We don't want to own it. Sell it. We think the shares get devalued to a point where it's being given away too cheaply. That's our opportunity.
Mm-hmm. When you look to Washington, D.C. at the moment, are you afraid because of the Fed, because of the budget talks?
I look at it a few different ways. I mean, one is it is somewhat concerning and even perhaps depressing as a citizen to see this level of dysfunctionality. That's concerning, and I think as an American, you don't like to see that. I think the reality is we believe and hope cooler heads will prevail, and things like the potential of a U.S. debt default, that people will see that is so damaging and such a negative that no matter what your legislative priorities, that ought to prevail, that sentiment to avoid that. So while there'll be some bumps in the road, and we've seen this in the past, and whoever the Fed chairman is, there are a bunch of bumps and lots of news headlines, but at the end of the day, for us, this will smooth itself out, and our concern more is again on the bottoms-up fundamental companies. And to the extent people have a daily panic or get real concerned, we generally use those as opportunities as opposed to trying to be on the front end of a panic. We want to be buyers when people are panicking as opposed to being sellers when people are panicking.
Peter Langerman of Franklin Mutual Series. Thank you so much for your time. Appreciate it. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen. Wir sehen uns bald wieder hier aus dem Studio der New York Stock Exchange.